Are you thinking of selling your company someday, or maybe you're already in the process of looking for buyers to exit, or you are a startup and someday you have this dream, you have this goal that you could sell your business, your company for a massive windfall, right? That's kind of what a lot of entrepreneurs dreamed about. Now, today I'm going to share 5 strategies with you on how do you sell your company for massive money. Now, I've had the privilege of learning from my mentor, Dan Pena, the $50 billion man. You might have seen some of his videos on YouTube or on social media, and he taught me a tremendous amount when it comes to M&A, mergers and acquisitions, and acquiring companies and selling companies. Now, in my career, I have sold a couple of companies for a decent amount of money, making a decent amount of profit. I've had some horrible exits where I basically gave my companies away because I didn't want to run them anymore. And there were some deals that I sold and I kind of broke even. So I want to share some kind of hard-learned lessons with you, that the to-dos and what not to do's, and hopefully you won't make those mistakes. So strategy number 1, and that is EBITDA. In case you don't know what EBITDA means, it means earnings before interest, taxes, depreciation, amortization. So once you understand that, they look at your earnings, meaning the more earnings that you have, the more you can ask for the purchase price, right? So it's very critical. So if you are planning to sell your business, if you want to get the maximum amount of money, you want to have steady growth, so that potential buyer looking at your financial statements, you're not at a decline. Most business owners, most entrepreneurs, they sell their businesses too late, right? And I made that mistake. They wait till the business plateau or it's actually at a decline that they want to get out, not exit at the top, but they want to kind of get out of the business. Then they try to sell, they're struggling. You don't want to do that. You want your business to kind of going up, and it's on an uptick and uptrend, and it's this year, let's say in the last 3 years, and you see this kind of steady growth. Then a potential buyer looks at that and say, hey, this is pretty good, there's still potential, this company is growing, or the industry is growing. You will be able to ask more money for that. Strategy number 2, risk. Now, a potential buyer, a business buyer, would also look at your business in terms of risk. So let me give you some different forms of risk. It could be concentration risk, meaning maybe you are operating, let's say you're selling a retail business and you have one location and all your business comes from just one location. Well, that's a concentration risk, right? Because you're limited by that geographic area. Or maybe is there some other developments around the area, or you're counting a lot of your business from schools, hypothetically, okay? And then that school is going somewhere else, or that's a concentration risk. Or maybe you have 30% of your business, your revenue comes from one client or one business account. Well, that's a concentration risk, because if that client leaves your business, now you're in big trouble. Let's say you're selling B2B and your biggest customer is Walmart. And if Walmart stops buying from you, guess what? You are in trouble, right? That's a concentration risk. And there are many other forms of risk. Maybe in terms of your technology, and maybe you don't have a patent, right? Maybe a lot of technology that you have, that you are using right now, you don't have any protection. Anybody can come and kind of knock off your idea. Well, that's also a problem, right? That's another form of risk. So a potential buyer will look at, hey, how much risk am I gonna have when I buy this business, right? What's the downside? They will look at that, not just the upside, but what's the downside? Strategy number 3, and that is types of revenue. Now, not all revenue is created equal. Now, I've looked at business before where this business is doing very well, but there's one problem, there's one thing that I really didn't like about the business. The business will make a lot of money in certain months, okay, and then a big chunk of the year, they're like that. They're like this, like it's almost dead. Now, so they make all the money for the year in a couple months. Now that to me is a problem. Because it means if there's anything that happens within a couple months, maybe you miss something. Maybe if you are in farming, hypothetically, something happens with the weather or whatever it is, like a lot of outside factors affects your revenue. Now that's a big risk, right? On the other hand, if your company has a lot of what I call recurring revenue, right? That to an investor, to a buyer, that's very attractive because they know, hey, every single month you're gonna have recurring income, recurring revenue coming in. That tells me how stable the company is. So if your company has certain windfall revenue, but you have a lot of recurring revenue, suddenly you can ask for a lot more money. I mean, a lot more money for your business. So think about what you could do to create more recurring revenue if you're thinking about selling your business, right? Or other types of contracts that you have coming down the pipeline. That, hey, I've got 2, 3, 5, 6 big deals coming down the pipeline that, hey, if we close those, that could be worth a lot of money. Now, a good investor, a good buyer is not gonna count on that, but it's like icing on the cake. Hey, maybe in 3, 4 months, there's some windfall, right, that's coming in. Strategy number 4, your management team. You could ask for more money if you have a strong team in place. So then a potential buyer, they're not just buying your product, they're not just buying your business, they're not buying your revenue, but they're also acquiring your team, right? So you put a great team together so the buyer could just take over without hiring a lot of new people, right? Without changing the entire management team. Well, that makes it a lot more attractive. However, if your business depends 100% on you, that you are the main driver, hypothetically, you have a little small business, right? You have a little consulting business, and it's just you, right? First of all, that's not a sellable business. No one wants to buy that because it's all you. You are the one that has all the relationships with all the clients and customers and accounts. You're the one that's talking to them. You're the one that's doing fulfillment. Well, that's not a scalable business, right? But if you take you out of the equation, everything else, the team, the product, everything that you have, that part of it, if you take you out of the equation, it is producing a lot of revenue or even more revenue. You've got a very, very attractive business that you can ask for a lot of money. Strategy number 5, and that is don't get greedy. Leave some money on the table. One of the mistakes I see business owners make, entrepreneurs especially, they get too greedy. So let's say this is your business, now you get a debt to this point, everybody wants to sell at the peak, right? You want to get the most amount of money, maximum money for the purchase price for your business. Don't do that, right? Don't do that. Just like, you could ask for this much, let's just leave some money on the table, right? Leave some money on the table so then the buyer could see, hey, if I buy this, there's still a lot of upside. That if I can improve certain things, maybe improve customer service, bring on better people, or improve your marketing, I could take this, maybe I could increase the revenue by 10 to 15% in the next 12 months. That's a lot of upside for a potential buyer versus you try to squeeze every dollar out of them. Leave some chips on the table. Let them, hey, I think we've got a great thing going on, right? I think we've got a great business, we've got a great team. And I think there are still so many things, so much potential that we could squeeze out of business. And here's the plan. Then I think there are 20 things you could do in the next 12 months that will actually really move the needles. The potential buyer looks at that like, this is great, right? Not only I'm buying a proven business, great product, a great brand, a great team, also you've given me a great plan. Now they're calculating the number and say, hey, wow, I could potentially recoup most of my capital in certain period of time. Maybe it's a 3-year deal, maybe it's a 4-year deal. We keep all my investment. Now they say, hey, this is the great deal. It is a win-win. That's what you want to do. Don't get greedy. Leave some money on the table at the end of the day because you want to sell the business. You spend a lot of time nurturing your baby, right? Your business is your baby. So you want to kind of give the baby to someone who would take this baby and grow it into a teenager, grow it to an adult and nurture, right? And take it to a whole new level. You don't want someone to buy the baby and then just kill the baby. That's not nice. That's not pleasant, right? Unless that's whoever is buying it, that's the strategy, which sometimes happens, by the way. There are companies out there, they buy you out just to take you out of the game because they want to eliminate competitions. That is a viable strategy, but for most, right? I'm talking for most, We want someone to, hey, this is my sweat. For most, this is my sweat, blood, and tears for the last 5 years, 10 years, 15 years. I want someone to take care of this, right? I want my people to be taken care of. I don't want someone to come in the company and fire everybody else, right? Fire all the people who've been with me for 15 years. I want someone, hey, they're gonna take care of my people, they're gonna take care of my team, right? They will still have a great job, a great place to work in, hopefully to take it to a whole new level. So those are the 5 strategies that I want to share with you if you're thinking of selling your company for maximum money, or on the other hand, you're thinking of buying a business, acquiring a business. Those are the same 5 factors that you should look for. Now, if this is the first time you are watching my video, hey, I'm teaching you some good stuff, right? All I'm asking is hit the subscribe button and turn on the notification. Give me a thumbs up. That's all I'm asking, right? Subscribe to my channel. Every single day, I upload a new video for you. Keep learning, keep growing, and comment below if you have any questions or any future videos, right? You want me to take this topic, you want me to expand on certain things, let me know as well. I would love to hear from you.